Let's Get Down to Business is presented by Bravo, the marketing arm of Ash Brokerage Corporation, the practice enhancement company. All this week, it's news you can use, and on today's show, it's our disability insurance update for December 2013. And with me today is nationally recognized disability expert, Tim Kakeza. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. Let's get down to business. Well, welcome to the show, Tim.
Thanks for having me back, Steve. I appreciate it.
Well, listen, we're talking about our monthly update for December. We're closing out the year, and there's a lot going on in DI. But before we get into that, I've noticed that you really are playing up key person DI lately, and you have there's a lot of good principal brochures on this. We have a lot of good docs. But talk a little bit, why do you think key person DI is so hot right now?
Key person policy is becoming more and more interest to the agents out in the marketplace because really it provides a great benefit to that employer who has that key person associated with their firm, that if that person became disabled, the firm would suffer a lost revenue. And a couple examples of that are we've recently run into a case where a hospital had a surgeon on staff that was generating a lot of revenue for the hospital. So they felt that they need to insure that person for a key person. So if that physician became disabled and couldn't do all the surgeries, they were going to lose a lot of revenue stream to the hospital because of that person becoming disabled. So what you see in the marketplace is, from an employer standpoint, a lot of interest. The product itself has a lot of benefits that the agents can talk to their clients about and provides a great benefit back to that employer.
Now, so if I'm hearing you correctly, I mean, people are targeting their rainmakers. They're targeting their big admin people that are running the operation of their firm. Is DI in this scenario deductible to the employer?
For this policy, it is not deductible for the employer. And really, when you receive those proceeds, you really want it to be deductible because those proceeds are going to come back to you on a tax-free basis. And that revenue or that amount of benefit is going to be a tremendous revenue stream that you wouldn't want to have to pay taxes on at that point.
If you're selling key person DI, Tim, do you think the tandem sale, are they still also doing personal executive benefits for the person they're putting the key DI on?
Yeah, that's a great point. What you see with the key person policy also is you can use that as an extension of the individual disability benefits. The key person can also be on the business owner himself. So there are some criteria that the carriers have in regards to whether or not you can insure a percentage of ownership for that key person. Principal, as an example, has if you're 50% or below, you can still buy a key person policy on yourself as the business owner. So in that example, if I've maxed out my individual disability benefits by their issue participation tables, then as a business owner, I could still buy a key person policy on myself. And if I became disabled, those proceeds go back to the firm, and therefore I can do with what I want with those proceeds. So it almost could be an additional individual disability policy in addition to what I already have.
So if I'm hearing you correctly, so the individual DI and the key person DI on the same person, like the business owner, like you're saying, really maxes out the top benefit that you could actually get.
Yeah, it's a great advantage in that situation. And also, we've used it in some buy-sell situations too. For the buy-sell, of course, there's also issue and participation limits for buy-sell. But it's a situation where if your buy-sell gets maxed out in terms of the benefit amounts, you can still buy key person for that business owner. And normally, those key person proceeds are paid much quicker than a typical buy-sell, which is normally at least a year-long wait, if not 2 years, where we can have a key person policy paying a lump sum benefit in 6 months and therefore injecting a lot of revenue into that business to get through that 1 year wait in addition to buying that buy-sell policy.
Now, I know maybe the 1 year wait for the overhead, that's kind of traditional, isn't it? But what about DI key man? What do you see? Is it 90-day waiting period? Is probably the average, or is it a little longer than that?
Yeah, it depends upon the plan design. What typically happens is we can go as little as 90 days on the key person, and then you can do a monthly payment out to sometimes up to 2 years based upon the specific plan design. Or if you want to go to a lump sum situation, we usually have to go to a 6-month wait. But after that 6 months, you can go to a lump sum, and typically the benefit amount is about 2 times that key person's salary. So you could do a lump sum for up to, with principal as an example, they'll go up to 500,000. So anybody that's making $250,000 or below, you can do a lump sum up to 500, and that is normally a 6-month wait time for that lump sum.
Do you see any of the tandem DI buyouts in these scenarios too? Because we're talking about key person, then we're talking about the same key person being the same person for the executive DI benefit. Now let's go up one more step. How about DI period from a buyout point of view if I have partners engaged?
Yeah, again, as I mentioned a little bit earlier, that buyout and key person work out very nicely, because what happens with that buyout, again, is you could go up to a 2-year wait, but the business may still need that influx of capital. So even if you go to a 6-month wait on that key person in a lump sum, then there's a tremendous amount of revenue infused into the business, and therefore that helps that business get by from that 6-month time frame out to that 2-year time frame when the actual buy-sell might kick in. So either whether it's individual and buying on top of individual policies or buying on top of the buyout policies, that key person is a tremendous policy in those situations.
And you have a lot of information on this. If people want to write you and say, hey, I'd like to more information on what you're talking about, you have plenty of it.
Yeah, we have in the marketplace, Principal and Peterson are our 2 primary carriers. There's great marketing pieces out there, but overall, we love having the conversation with the agents. We love giving them the ideas associated with, as I mentioned, the surgeon a little bit earlier, and making sure that we design the program that makes sense to their client and making sure that they understand the program so we can get them the marketing pieces, but we would love to have the conversation.
When we come back from the break, we're going to continue our disability update for December 2013. And you can request the Disability Insurance Manual from Backroom Technician right on our site at www.downtobusiness.ashbrokerage.com, or just sign up for your own 30-day free trial offer at Backroom Technician at www.brtnow.com/trialsignup.aspx. We'll be right back after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back. I'm Steve Savant with Tim Kakeza. Remember, you can watch all our episodes of Let's Get Down to Business, including my weekly consumer show, Steve Savant's Money, the name of the game, at ashbrokerage.com. Just click on the show logo right on our homepage and it'll take you right out to the shows. And just a heads up, before moving forward with any of the ideas on the show, always consult your tax advisor or legal counsel, as well as your broker-dealer compliance officer. Well, let's get down to business. We're continuing our disability insurance update for December 2013. Tim, before we get going into the second segment, I want to ask you, you just did a business overhead expense webinar, isn't that true?
Yeah, we did a business overhead expense webinar last Tuesday, but out on our website at ashbrokerage.com, that webinar is available for replay. So if you happen to miss it, or if you're just finding out about it for the first time, we'll be able to include that link with your information that will allow those agents to go back out and review that business overhead expense webinar.
So I encourage every one of our advisors watching to go back out there at Ash Brokerage and check that webinar out, especially if you're looking in the business market and you want to open up a case. Sometimes business overhead's better to open up a case that way than it is individual DI.
Yeah, I mean, what people see in the marketplace is that their incomes they understand, but their businesses are their livelihood. Their businesses are their passion. And the business overhead expense policy helps protect that business if they become disabled. Therefore, that business can stay around, be up and running. They can get through the recovery time associated with the disability and have a viable business to get back to. I think the business overhead expense policy is a tremendously undersold product with an opportunity for you to do daytime activity if you're one of those agents looking for daytime activity, or bring a product to the business owner's attention that they may not even be aware of.
Tim, I want to shift gears a little bit about morbidity underwriting, because everybody says, hey, DIs is only as good as the underwriting. Talk a little bit about basic mental nervous disorders, anxiety, depression. Give me a little potpourri, kind of a digest of how we're looking at that now.
Yeah, that's a critical aspect, I think, in terms of what we do on a daily basis when we talk to agents. We're seeing more and more medical inquiries come through in regards to, it's nice to see that because the agents are now understanding the repercussions associated with some of the medical issues out there. But mental nervous anxiety and depression is one that is very critical in terms of the underwriting aspect. What you've seen over the last couple of years, those claims have gone up tremendously in regards to the DI carriers, and what they're trying to do is figure out how to underwrite those. So we spend a lot of time talking to agents about the mental nervous depression, anxiety, but when you look at those, the key element for the agent is to make sure the expectations are set when you talk to your client, letting them know that there might be some limitations on this policy, there might be a shortened benefit period on the policy, there might be a rating on the policy, and it's all going to be based upon the types of medications they're taking, how long they've been taking the medication, how well controlled that medication is. But the mental nervous side of things is becoming a bigger and bigger point of interest to talk about with agents in the marketplace for DI.
Well, when I think about medical underwriting and I think of DI, I think of Lloyd's of London sometimes. They seem to be a player in your market.
Yeah, there's no question about it. When we do daily activity with the disability team at Ash Brokerage, Lloyd's of London, Peterson International is our cover holder primarily for our Lloyd's of London product. It comes into play on a daily basis, whether that's medical conditions that we can't get through with a traditional carrier, whether that's unique situations. I was just talking to my marketing team this morning, and we got an illustration request for a test pilot. No traditional DI carrier is going to insure a test pilot, whereas that's going to be a Lloyd's of London case. So unique situations, age comes into play when you go to a Lloyd's of London cover holder. More and more people are looking to buy disability later in life. Traditionally 59 or 60 might be the cutoff age. Peterson will go well beyond that. And benefit amounts. We talked about business overhead expense earlier. A typical business overhead expense policy on the high end might be $50,000 a month of benefits. Last year, we wrote a business overhead expense through Peterson for almost $350,000 a month of business overhead expense. So no traditional carrier is going to touch those types of amounts.
When I think about this, I'm kind of want to shift gears because we want to talk about Lloyd's, but now I want to shift gears a little bit about this new kind of underwriting, this simplified issue from a couple of our carriers. And the one that kind of sticks out in my mind, especially after my 30 years in the business, is this MetLife simplified underwriting program. Talk a little bit about this because these numbers seem to be extraordinary.
Yeah, it's actually, for those of you familiar with simplified underwriting, or if you're not, basically the idea there is you can apply for a specific amount of benefit, and with MetLife, it's up to $6,500 of individual and up to $10,000 of business overhead expense. And in doing so, you don't have to do any medical requirements. There's no financials needed. So that amount of coverage, Steve, to your point, it is an amount that really the industry has never seen before, for you to be able to go out, not get any financials for your policy, not have any medicals done, and have a policy issued on a quick issue basis, basically, as long as you meet the age criteria and the benefit criteria associated with those simplified issue amounts.
I have to say, I don't know of any other carrier that's leading the league in DI in simplified issue like this. We've seen a couple other of our carriers raise their limits, though, to try to come up, not matching it, but still, the industry now is following Met's lead.
Yeah, it's an interesting point in the industry where, I go back into the 80s when I started in this business, and there was a lot of leapfrogging at that point in time that kind of curtailed a little bit. But we're starting to see that again with some rate decreases with disability carriers, with aggressive underwriting, trying to figure out the underwriting process. And as you said on the simplified issue, some other carriers have stepped up their simplified issue limit amounts, like Principal as an example, have increased their benefit amounts on their simplified issue basis to try to match the MetLife. So in the disability world, it's as good a time as any to be out there talking about disability. The product portfolio is fantastic. The underwriting is becoming more and more aggressive. The simplified issue and other programs like that, it's just a great time to be out there writing disability benefits, whether that's individual or business-related products.
Thank you, Tim, for being on our update show. It was great.
It's a pleasure. Thanks for having me.
Well, that's our show for today. Remember, you can read all my online insurance commentary, advisor blogs, and articles on Producer's Web, as well as my answers to consumer questions on the Insurance Library. You can view all of our past episodes on the on-demand section located at downtobusiness.ashbrokerage.com. So follow me on Twitter, Facebook, LinkedIn, or just email me, steve.savant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor.